Today I've got some essential insights that will guide you into taking the right steps after you've shortlisted and inspected potential properties. I know a burning question in your mind is, what's this property truly worth? Well, today let's dive into understanding exactly that. In your journey to find that ideal investment, this is perhaps one of the most critical stages, so let's break it down. Firstly, without any subscriptions, you can start with the free website Property Value. This platform offers a value range, giving you a ballpark figure to work with, i.e. $600,000 to $650,000. Here's a simple analogy. Think of this range in the terms of market pressure. So a buyer's market, you're going to be looking at the low end of the range, which means low demand, more supply. A balanced market, both the demand and supply are in equilibrium. Or a seller's market, here you're going to be pivoting towards the higher end of that range where typically demand outweighs supply. Now with that foundation in place, let's move on. Your next step is over at realestate.com. Now navigate to their sold section. Your goal, to find properties that mirror your desired property in terms of internal size, land size, and overall condition. Now these should have been sold in the past 3 months. Anything beyond this time frame could represent different market conditions that those properties were selling under. If you can't find a perfect match, branch out to adjacent suburbs. Just ensure the suburb quality remains consistent and matches the suburb you're actually looking to buy in. By coupling the range from Property Value and these comparables from realestate.com, you can pinpoint your property's value, often within a $10,000 to $20,000 range. Now, accuracy is key. But here's a golden nugget of advice. Always, and I mean always, circle back with the agent after your inspections. Gauge the competition. If it's a property that has multiple contracts on it, that could skyrocket its price due to fierce competition. More demand often translates to higher prices. And for all my savvy investors out there, remember this. Owner-occupiers can sometimes drive up prices because they're willing to pay more for their dream home. Know where your property value lies and know when to walk away. All right, folks, we've laid down the foundation. Let's add to the walls and roof of our property investment blueprint. Now, have you heard of the Property Investor Analyzer tool? If not, you're in for a game changer. Now, we've developed this in-house, and this tool is free for you to download. And we're very proud of this tool. Now, if you need a hand while working with this, just give us a call and we can run you through it very quickly on the phone. Now, this downloadable tool is paramount for 2 critical reasons. 1, predicted performance. It provides a window into the property's projected cash flow and capital growth, ensuring that your investment meets your ROI expectations. And number 2, pricing strategy. The figures here will give you a strong footing in determining your price limit. Now, if an agent suggests a deal at $630,000, but your analysis pegs value closer at the $610,000 mark, well, that's your limit, and you really should be starting much lower than that in your negotiation process. So, after this comprehensive analysis, how do you make an offer? Let's get into the nitty-gritty of this. Now, your offer reflects your research and understanding of the property's value, but how you present it is equally crucial. Always kick off by discussing the offer methodology with the agent, be it verbal, written, or through a dedicated online form. In the realm of property, knowledge is power. Know the market conditions, understand buyer interest, and deploy the optimal negotiation strategy. And remember, in a fierce seller's market, your terms and conditions can be the ace up your sleeve. An offer might not win because it's the highest, but because it's the most appealing. So take notes. Be observant and understand the property owner's motivations for selling. For example, if the owner needs a rent-back arrangement, craft your terms and conditions to accommodate it. Here's a standard set of terms we usually employ in high-demand, low-stock markets. You put in your offer amount, which is defined by our previous steps. We also put in a 14-day clause for finance, building and pest, and due diligence to give you the time to do your research and to get all your ducks in a row. Now note, due diligence might need to be omitted in multiple offer situations to strengthen your offer position. Here's a golden nugget. Once your offer is accepted, immediately engage a conveyancer. Now, their keen eyes often spot discrepancies in the contract, ensuring that the contract is robust and fully complete. Also, make sure you loop in your mortgage broker. Keep them in the loop as they play a vital role in your property acquisition process. And for my friends in Queensland, here's a super specific tip. Once you've made a successful offer, get insurance for your property. By law, it's your responsibility as a buyer after 5 p.m. the following business day to protect that property with insurance. So you've had your offer accepted and the contract has been checked over by your conveyancer and now it's been signed. Now it's one of the most crucial steps, booking your building in Pest Inspections. So let's dive into it. Here in Southeast Queensland, we put our trust in the reputable building and pest service provider called Dendant. Now, their meticulous inspection and comprehensive reporting set the gold standard, in our opinion. Now, these reports can seem daunting, but let's break it down. Dendant and many other services usually categorise defects as either major or minor. Now, minor defects, these are small wear and tear items. Think paint chipping, a sag in the ceiling, or a cracked tile. In the industry, we fondly refer to these as green flags. While they might catch your eye, they're usually not deal breakers and they aren't worth heavy negotiations unless there's a substantial list of them. Then we have major defects. Now, this is where you have to be vigilant. These are potential yellow or red flags that demand your attention. From moisture readings in the shower to falling retaining walls, major defects can significantly impact the property's value and your decision to approve, because repairs can be substantial costs. When faced with major defects, it's paramount to get quotes from tradespeople to understand the repair costs. Now, this not only prepares you for potential expenses, but also strengthens your negotiation stance if the seller needs to meet some of these costs. It's crucial to revisit your due diligence in the post-contract phase. For those who's tuned into our due diligence video and worked through the pre-inspection checklist, you'd remember that there are certain items we earmarked for a later date. Well, the time is now. Think of it as a second sweep, ensuring nothing vital got missed. Diving deeper into specifics like easements or assessing the zoning for development potential becomes paramount at this stage. It's not just about understanding the property's current state, but also about envisioning its future potential and constraints. If these concepts seem a tad complex, or if you're unsure about the intricacies, don't hesitate to bring a town planner on board. Their expertise can offer clarity, ensure compliance, and potentially unveil opportunities you might not have even considered. Remember, due diligence doesn't end once the contract is signed. It's an ongoing process, ensuring you're well informed, mitigating risks, and maximising your property's potential. Stay thorough, seek expert advice when you need, and ensure your investment is both sound and promising. The lesson here is simple, but crucial. Always circle back. Ensure every aspect, even those you've previously touched upon, is given a thorough second look. This level of meticulous attention ensures you're making the most informed decisions and not merely following the lead of the selling real estate agent. Remember, their primary duty is to the seller, not you as the buyer. Diving into the world of property investment doesn't stop at simply purchasing a property. There's other essential components you need to be aware of. Accounting, specifically understanding depreciation. Now, depreciation might sound like an accounting buzzword, but it's crucial. As properties age, naturally they undergo wear and tear. Everything from the building structure to the assets inside deteriorate over time. The good news, the Australian Taxation Office, or the ATO, acknowledges this and provides avenues for tax deductions. Now, these depreciation claims fall into two primary categories: capital works and plant, and equipment assets. Let's start with capital works. This pertains to the wear and tear related to the structural elements of the property. We're talking about the bones of your investment, like the walls, roof, doors, etc., and even the kitchen cupboards. Now, if your residential property began its construction journey after the 15th of September 1987, you're in luck. You can claim capital works deductions typically at a rate of 2.5% annually for a span of 40 years. But that's not all. The second category, plant and equipment assets, focuses on the items inside your property. Think about the movable items that enhance your home's functionality, like carpets, air conditioners, blinds, smoke alarms. The depreciation of these assets is determined based on the specific effective life as outlined by the ATO. However, a quick heads up, in 2017, the rules around claiming depreciation for plant and equipment assets underwent some changes. So it's always wise to stay updated and seek professional advice. In essence, being aware of depreciation isn't just smart accounting, it's essential for optimising the financial benefits of your property investment. Don't just focus on the present value, understand the property's financial journey over the years. Equip yourself with this knowledge and your investment strategy becomes not only powerful, but financially savvy. And apart from this, ladies and gents, thanks for tuning in. Our channel's growing by the week and we absolutely love seeing the viewership that these videos are getting. Until next time, happy property navigating.